Welcome everybody to the Johnson Matthey Platinum Group Metals Conference, Critical to the Future of Sustainable Technology. So what is the role of PGMs in the future technologies, or those technologies that are going to allow us to have a beautiful, sustainable and successful future as human beings on our wonderful planet? My name is Dr. Sarah Gordon. Now, before we get started, or basically the bit that you have all been waiting for, because of course this is a conference, and Emma, I'm going to invite you to maybe say some words against this particular slide, because of course this is a Johnson Matthey conference. There is a little bit of a legal disclaimer we need to flash up at the beginning in front of you. We will put this into chat as well if any of you want to read this in detail. But now Marge is going to bring to us a little bit more information with regards to the supply demand equilibrium. And I'm sure all of you will have been doing the back of the envelope calculations for when Vilma was telling us just how much platinum, palladium, etc. is being used, or what the demand is every year. And depending on how you do that, I make it coming out as being somewhere in the region of the equivalent of 3 very large blue whales worth of metal. So I'm going to take this into the biological realm. I don't know if my calculations are correct, because I think that a blue whale weighs approximately 200 tons. So I don't know. Let's see how many animals worth of PGMs do you think that we use, or what does that demand supply equilibrium look like? So Marge, thank you so much for coming and joining us here today. Everyone, please put your hands together for the phenomenal Marge Ryan. Thank you very much.
Thank you, Sarah. Good morning, good afternoon, everyone. I'm Marge Ryan, obviously, and I'm really pleased to be here today to speak to you about the platinum group metals. I've spent my entire working life in PGMs in one form or another, and that's because I want to do something that makes a difference in the world, and the PGMs absolutely do that. I'm going to talk specifically about the supply and demand equilibrium and what that could mean for the future. Johnson Matthey is a platinum group metals company. We recycle and refine the PGM. In fact, we're the largest secondary refiner by volume. We use them in a vast array of different products and applications. We trade and sell them. And we also have an in-house platinum group metals market research team. So that's a team of 12 expert analysts conducting primary research into PGM supply and demand now, and then forecasting that into the future. And I'm speaking on behalf of that team today. Before I go on, our disclaimer is a riveting read, but I do just need to say nothing I say should be taken as investment advice, or indeed advice to do anything in particular. In the next half an hour or so, I'm going to start off by talking through some definitions. I mean, supply and demand is pretty self-explanatory terms, and a lot of this is going to be very familiar to many of the people listening today. But I think it's helpful to clarify our terms and understand what we're talking about before we get into the discussion that follows. I'll then take a look at the profile of platinum group metals supply today, and importantly, that is primary and secondary supplies I'll discuss. Vilma has done a brilliant job talking about where the PGMs are used. I'm not going to go into that in too much detail. I'm just going to show you the profile of platinum group metals demand today, and then talk about how we ensure the sustainability of PGM use. I'll then discuss the supply and demand equilibrium. And spoiler alert, there is no equilibrium. So we'll get to that. I'm then going to look ahead. I can't share our forecast, those aren't public, but what I can do is talk about some trends that we expect to see in supply and demand. And then I'll discuss what this means for the future, and in particular for the PGM as critical and strategic materials for the future. So let's start with some definitions then. So supply and demand. On the supply side of the equation, we've got primary supply, which is metal that's mined and sold by the miners in a particular year. We've also got secondary supply, and that is recycled metal recovered from open loop recycling. It's open loop because ownership's not retained. That metal is sold onto the market. You have to count both when you're talking about the PGM. I'll come back to market stocks in a minute. On the demand side of the equation, we've got automotive and industrial demand. And this is what we call our inelastic sectors of demand. This is PGMs being used in technologies because nothing else will work. So it's inelastic from that point of view. It's important to note that automotive and industrial demand, as we report in our PGM market report, is reported net of closed loop recycling. So it's demand for new metal in a year, that closed loop recycling is a key feature of the PGM markets. It's kind of invisible. It doesn't appear in the reported numbers. What it does is it reduces net demand. So closed loop recycling is netted off automotive and industrial demand. And it's closed loop because the metal's being kept within the application. We've then got two further categories of demand, so jewelry and physical investment. These are the elastic sectors of demand because people don't have to have the metal, they want to have the metal, and at the right price, they could sell it back to the market. Jewelry is obvious. Physical investment, there's a variety of different ways to gain investment exposure to the PGMs. What we are interested in is an investment that involves a physical movement of metal either off or onto the market again, and that is something we can track. So that's what we report there. Now, in any given year, supply and demand do not need to balance. In fact, usually they don't. So this is where we come to market stocks. Because in a particular year, if you've got more supply than demand, you've got a surplus, and that results in a movement of some of that surplus metal into market stocks. In a particular year, then, when you have a shortfall in supply, you draw on those market stocks to make up that deficit. So you've got market stocks performing that balancing function, moving in and out depending on whether the year is in surplus or deficit. Nobody knows exactly the full extent of those market stocks, but that they exist and that they do this is well known. Let's take a look at the profile of platinum group metal supply today. So primary and secondary. So I'm showing you the full profile here. And Sarah, is my key visible at the top, or has that been blocked out by the...
Yes, your key is visible. We can see it.
Brilliant. Okay, so a couple of things to note here. Primary supply shown in the blue, green is secondary supply, recycled metal. So you can see how we can't ignore that recycled metal. It is a key part of supply, in particular for platinum, palladium, and rhodium. Around a fifth of platinum supply today, around a third of palladium and rhodium supply today. And the main source of that is scrapped catalytic converters. It's that auto scrap. So it's no surprise that this features in the platinum, palladium, and rhodium markets because those are the three metals used on catalytic converters, and therefore they come back when those catalytic converters reach the end of their life and are recycled. Other recycling, I'll talk a bit more about that later. But let's move on to primary supply. So immediately you can see the really significant portion of dark blue there. So primary supply of the PGMs is heavily dependent on Southern Africa. That's mainly South Africa, also Zimbabwe. This is particularly true for platinum and the minor metals. So what do we mean by minor metals? Well, you can see platinum and palladium, we're talking about markets of a few hundred tons a year, rhodium and ruthenium around just over 30 tons a year. And then iridium is the really minor metal, 7 to 8 tons a year. So rhodium, ruthenium, and iridium are what we call the minor PGM. And you can see how heavily dependent they are on Southern African mining. And indeed, that's platinum mining in South Africa, or PGM mining really, truly, where rhodium, ruthenium, and iridium are coming out largely as byproducts of that platinum. Palladium is a little bit different. A lot of it does come out of Southern Africa, but a lot of it also comes out as a byproduct of nickel mining, particularly in Russia. And you can see therefore palladium is the only one of the 5 that really has significant exposure to Russian mining. Ruthenium and iridium, no green there. That's not because they aren't recycled. They're routinely recycled in very substantial quantities, as is true for all the PGM in closed loop. So generally, you don't see open loop recycling there, putting metal onto the market, but of course, it's possible that that could happen. And then you would see a green segment in those 2 donuts for ruthenium and iridium. So let's focus a little bit more now just on primary PGM supply. So setting aside the secondary supply for the moment. And this is kind of how primary PGM supply breaks down by region. And you can see that it's Southern Africa, but in particular South Africa, and then some from Zimbabwe. And the other thing, which Emma mentioned earlier, and which is really quite important to note, is the extent to which mined PGM supply is done as co-products or byproducts. And what I've done here is grey out anything that is produced technically as a co-product or byproduct. And you can see it's really only platinum that we consider to be the kind of main target of mining in Southern Africa. I mean, in recent years, given the prices of rhodium and palladium, it's more a case that they've been co-products really, and it's been mining for the whole lot. But we still traditionally talk about them as platinum mines. Palladium, there are only a couple of mines in North America where palladium is mined in its own right. That's the main target of that mining. All the rest of palladium coming out either as a byproduct or co-product of platinum or nickel. Rhodium, ruthenium, and iridium entirely mined as byproducts. So we've spoken about this reliance on Southern Africa. So what does that mining look like? So who mines? These are typically large listed companies that are subject to really strict regulation. So the South African mining industry is highly regulated, stringent requirements in employment and labor law, and really strict requirements for health, safety, and environmental practice. These companies report on their performance, including reporting extensively on their ESG performance, and they are also investing in reducing their environmental footprint, particularly taking the form of significant investments into renewable power generation, for example. From a social point of view, they invest in local communities in both South Africa and Zimbabwe. Local community engagement is seen as key to the sustainability of these operations. And that social investment takes many forms. What does it look like? It looks like building schools. It looks like the provision of healthcare, and it looks like scholarships to send people to university. And I myself was sent to university on a platinum mining scholarship, and that's where I got my start in life. This is in fact mandated. So in order to be able to mine in South Africa, the mining charter says you have to maintain detailed social and labor plans. Heavy reliance on one region does of course present geopolitical and operational risks. Now, mining anywhere in the world is subject to geopolitical and operational risk. It is just always a feature. But let's talk a bit more about the specifics here of PGM mining in Southern Africa. So two things to say about geopolitical risk. Firstly, we are talking about global South countries, and the critical economic benefit of this PGM mining is politically recognized in both South Africa and Zimbabwe. The other thing to say is that PGM mining, and particularly refining, is technically challenging. There is a very significant barrier to entry to actually do this. And that's why you tend to see most of the production being done by these larger companies and in fact, all the processing in the region. Operational risks are of more concern. So particularly at the moment in South Africa, electricity supply is a concern. What we can say is that these companies have a demonstrated track record in managing and mitigating risks in a frequently challenging operational environment. And the chart there just giving you an example. So this is platinum production from South Africa and Zimbabwe. And you can see in 2014, that prolonged, really unusual strike action that went on for months. And then the stoppages in 2020 due to COVID, obviously. And what you can see is how production really bounced back from that. So nothing is certain for the future, but these companies have this demonstrated track record. Secondary PGM supply then. So I've said this is from open loop recycling. It's open loop because ownership is not retained. The metal's returned to the market, hence it is supply. And it's value driven. So there are specialist collectors out there who go after PGM containing scrap because they want to recover the PGM and make money. So this is a really nice thing about platinum group metals, is that their circularity is value driven and already established. This value, this value drive is supported by the fact that secondary and primary PGM are completely fungible, completely interchangeable. It's not correct to only consider primary PGM supply to the market. You have to count the secondary metal as well, because on the market, they are the same. As I said, the main source of secondary supply to the market is scrapped catalytic converters, but we do also see some scrapped jewelry returning some secondary platinum to the market, particularly in Asia, and e-scrap returning a fair amount of particularly palladium. Let's have a look at the profile of PGM demand, and I'm not going to do nearly as thorough a job as Vilma, but let's just look at that snapshot of the demand profile. So you can see here a couple of things immediately. The first is, as Vilma said, that real predominance of the pink segment there, which is automotive demand, and that is catalytic converters. In platinum, in some of that pink, there is some fuel cell vehicle demand sitting in that pink, but it's quite small at the moment. So really, we are still talking the vast majority of that being catalytic converters. This is the single largest market for the PGM, as Vilma said. And you can see this is particularly true for palladium and rhodium. Well over 80% of that metal at the moment going into catalytic converters to treat vehicle pollutants. Platinum has a more balanced demand profile, if you like. It's still got that significant jewelry market, that elastic jewelry market. And as Vilma said, this has in fact been in decline for the last 10 years. So we sometimes see people forecasting jewelry growing in line with GDP. It's not that simple. And then platinum has a variety of other uses in various industries. Now, ruthenium and iridium are not used in catalytic converters. They are used in other forms in vehicles, as Vilma discussed. And what we're talking about is two industrially very useful metals. They have a variety of electrochemical applications. And iridium, of course, we know one of those is PEM electrolysis to produce renewable or green hydrogen. Some potential for ruthenium there as well. Various electronics applications, so ruthenium going into hard disks and resistors, iridium in OLEDs, for example. They're also used to produce certain chemicals, and then a range of other interesting applications. And for iridium, a lot of that gray segment there is spark plugs. So what we are talking about in general for all of these metals is incredibly industrially impactful metals. Really small markets, I mean, a few hundred tons a year. So we're not talking thousands of tons a year or hundreds of thousands of tons a year like the base metals, a few hundred tons a year delivering a really significant industrial impact. And that is supported by the fact that you don't need a lot of PGM to do a lot. They are used with very low intensity. There's two things I want to say about supporting the sustainability of platinum group metal demand. So the first is this feature, which is closed loop recycling. And this is really important to understand because a lot of people look at the secondary supply figure and think that is all the PGMs recycling that is happening, and that is not the case. There is a constant turnover of a significant amount of all the platinum group metals in this closed loop, a constant churn kind of unseen by the market, if you like. This happens routinely. It's closed loop because it means ownership is retained, so the metal is retained and returned to the application. And what it does, as I said, is it substantially reduces net demand. So it makes demand for the PGM more sustainable because without this recycling, we would need a lot more new virgin metal. The other thing to say is that this is true circularity. So we've already established true circularity in platinum group metals. It's already routine. It's our bread and butter. And the reason for this, of course, is that it is value driven. What it means for the future is it provides that incentive to design for recycle because you've got that end of life solution there. You can start thinking upfront about making your product have a best fit for recycling, because what you're doing if you are buying PGM to do something as a new application in a new technology, if you've got that end of life solution in place, you are investing in a recoverable asset. The other thing to say, and Vilma mentioned this as well, and I think it's really quite crucial to understanding the future of availability, as I'll discuss, is that the PGM, they're durable. So if you use them, that closed loop builds up. You're talking about, in many industries, over sometimes decades of PGM use, you've seen this constant build up of what we call the platinum group metal installed base, as capacity in certain industries has grown with time. Now, that metal's in use currently, sort of by definition, so it's not available to the market, but we do need to think in future about how technologies and markets will change, and then consider this installed base, which is not kind of visible in the numbers, which might support availability in future. And I think there was a question about petroleum refining in particular. So that particular subject I'll revisit on Thursday when I talk about our platinum white paper. So that'll be in Thursday morning session. The other thing that supports the sustainability of platinum group metal use is the fact that the intensity of PGM use is very low, but we don't stand still. We are constantly trying to drive down the intensity of PGM use even further, and we call this thrifting. So what is thrifting? It simply means trying to do the same or more with less metal. So thrifting is a feature of PGMs across most applications. And it does support the sustainability of PGM use in key applications, and it absolutely will support the sustainability of PGM use in the hydrogen economy and other new applications in future. There's a number of examples I could have chosen to illustrate this. I've picked one, and this is emissions control on European gasoline cars between 1992 and 2008. And that's the period during which we saw the phase in from Euro 1, so the first formal phase of emissions regulation, through to Euro 4, a much stricter phase of emissions regulation with much tighter pollutant limits, as Vilma's discussed. What I've done is just index this to 1992. So I've taken 1992 as the starting point and kind of worked out the percentage intensity of the duty. So the blue line is a proxy for how hard those PGM are working. It's the pollutant removal intensity over time, and you can see how that ramps up. The pink line is the intensity of PGM use in catalytic converters. So how much PGM on average did we have to put onto each vehicle to treat the pollutants? And you can see how initially that intensity of PGM use did track the intensity of the duty they had to perform. And then R&D was successful in delivering more efficient catalysts. And then you saw that decoupling between the intensity of the duty and the intensity of PGM use. And this is not an unusual feature in PGMs. So now let's talk about the supply and demand equilibrium. And I already gave you the spoiler alert, there is no equilibrium. So what I really want to say about this is supply and demand for platinum group metals does not need to balance, and it usually doesn't balance, and that's nothing to be feared. It's nothing new. Let's use palladium as an example. So this is the palladium market since 1990. The blue columns there show you the extent of the market imbalance in a particular year. So if the blue column is sitting above the zero axis on that left-hand chart, it's a year where we had excess supply, so surplus. If it's below the zero axis, it's a year where we had a shortfall in supply, so a deficit. And as I've said, this is a proxy for the movement in stocks we needed to see in that year to balance the market. And you can see constant sort of switching between surplus and deficit. But what's more interesting really is a sustained period of surplus or deficit. And you can see the effect of that more clearly on the right-hand chart. And what I've done there is just do the cumulative line for this movement in stocks, starting at 1990 as the index year. So I've set 1990 to 0, and then shown you how stocks accumulated from that point onwards. And you can see how we had a buildup of stocks and then a drawdown, and then a buildup of stocks and then a drawdown. And this is absolutely normal to the functioning of the market. And the stocks are still out there to support availability. And indeed, what this doesn't show you is there's also a lot of palladium sitting in investor hands still that could come back to market to support availability, because those investors, at some point, the whole point of investing in metal is that you do eventually sell it. So let's look ahead. Unfortunately, I can't share our forecasts, as I said, but I don't think we need to go through a lot of detailed forecasts to really understand the broad trends and why we're here this week to talk about the subject we're talking about. So let's start with primary supply. So one point to make here, and it's been made already, is that platinum group metals do not occur in isolation in ore bodies. So if you mine for the PGM, you mine a basket. That is the geological reality. I think this chart shows that quite nicely. So what it does is it sets out typical PGM grades by type of ore. On the right there under the PGM ores, so from Platte Reef through to Eastern Bushveld Merensky, those are typical ores, parts of the ore body in South Africa. Great Dyke is the deposit in Zimbabwe. And then in the middle, Stillwater, Impala, Canada, those are the two PGM mines in North America. And what you can see is these mines are typically rich in platinum and palladium, with varying concentrations of the minor PGM. And you can really see how minor the minor PGM are. So rhodium in the green, ruthenium in the purple, iridium as a sliver, turquoise sliver there. So you're going to mine platinum, you're going to mine palladium, and you're going to kind of get the others that come along with that. Now, base metal ores, so PGM are also produced as byproducts of base metals. That's shown on the left there. This is not showing the base metal grade, by the way, because that would be very large. It's just showing the PGM grade of those base metal ores. And you can see actually some of those ores contain more PGM than PGM ores. So we've shown there some of the ores in Russia. So that's Norilsk nickel, and then Vale, Sudbury, nickel, copper in North America. Typically palladium rich. Now, what can we say for the future? Well, we're going to want to keep mining nickel and copper. We're going to need that for the energy transition. That's not in dispute. We're going to continue mining those metals. We're going to need to continue mining platinum, because we're going to need to put platinum in fuel cell vehicles and use it in other clean energy technologies. And I'll talk a bit more about fuel cell vehicles in a minute, but also on Thursday. So we're going to keep mining these metals for the energy transition. And because we're going to keep mining those metals, you're going to keep mining the basket of the PGM. That is simply a geological fact. That basket is going to continue coming out of the ground. What's going to happen with secondary supplies? So Vilma's already shown you a form of this chart, and I think the reason we both show it is because it has really interesting implications for the future. So what this is not PGM recovered from catalytic converters. This is the amount of platinum group metals that went onto new catalytic converters, new vehicles in each of these years. So platinum, palladium, and rhodium, as you can see there, really ramping up with time. It's a really significant ramp up in that automotive PGM use, and we're still sitting at a very robust level of demand there, because as Vilma said, we're still making a lot of cars with internal combustion engines. There's a strict focus on air pollution at the moment, cleaning our air. So using those PGM to treat those emissions is a really critical use at the moment, and that will continue for some time. Now, what does this mean? Well, your typical vehicle stays on the road for 15, 18 years, maybe, sort of an average vehicle lifetime. But that profile of vehicle life at scrappage covers quite a long period. So you get some vehicles that are scrapped younger if they're in an accident, for example, and some vehicles stay on the road for decades. But let's call it 15 to 18 years, roughly. So all this PGM going on to catalytic converters shifted into the future by the lifetime of the vehicle, and that PGM is going to be available for recovery at end of life. The PGM are always going to have value, and that value-driven recycling will mean this metal will come back in future. So what it is, it's an urban mine, and it's a source of low carbon metal that will continue for decades. We know that. Now, what about demand? The future of auto PGM use will change, as Vilma's discussed. This is not in dispute. The only thing we're discussing is exactly what that change looks like. Exactly when the decline of fossil fuels in vehicles starts and how quickly it happens. Those are the only things we're discussing. But that the change is coming is not in dispute. And the reason for that is climate change, obviously. So the Paris Climate Agreement means that we need to get to a net zero global economy soon after 2050. What does that mean for vehicles? It means that the vehicle fleet, the road vehicle fleet or the park, has to be net zero soon after 2050. Okay. Average vehicle lifetime 15 to 18 years. We've kind of not left ourselves enough time to do this. There's a lot of heavy lifting to do here through electrification. So what I've shown in this chart is one scenario for vehicle powertrain evolution. There are many, this is one. And what I'm showing here is new vehicle sales every year between 2020 and 2050, and the different shares or the types of powertrain of those new vehicle sales. And this is all vehicles, not just cars, it's trucks and buses and vans as well. So you can see the heavy lifting from electrification. BEVs mainly, but fuel cell vehicles playing that crucial supporting role. For why? We can't do everything with BEVs. Discuss this more on Thursday. This is a really tough challenge. We have to use all the tools at our disposal if we're going to do this in time. And in fact, phasing out sales of vehicles with internal combustion engine, which includes all hybrids, by the way, really tough to do, probably not going to do it in time. It's likely we will have to see some sustainable fuels providing additional decarbonisation where needed. So that's vehicles that still have an engine, but instead of fossil fuels, they use sustainable fuels. But ultimately, the direction of travel is that production of vehicles with an internal combustion engine will have to decline and probably go to zero. And that, as we've discussed, is the single largest market for platinum, palladium, and rhodium today. It won't be in future. So PGM demand for catalytic converters will decline. Platinum will see an interesting dynamic in that it has this replacement market coming along. So platinum demand for fuel cell vehicles will rise, but BEVs don't have catalytic converters. So what we are talking about is palladium and rhodium being freed up in future for new uses. And of course, that includes a range of energy transition uses, potentially the production of sustainable fuels and other exciting new applications, as we'll be discussing over the next few days. So what does this mean for the future then? So simplistically, for the supply and demand equilibrium, we could see something like this. So secondary supply will continue, primary supply will continue, and if we're meeting a declining demand profile, well, whoops, we're going to tip into a period of sustained surplus supply. But we won't, because natural shifts in demand support the development for the new of new applications for the three automotive PGM, platinum, palladium, and rhodium. And in a perfect world, we'd see something like this. So secondary and primary supply perfectly balanced by this combination of growing applications and declining applications. And maybe we'll see something like this for platinum, but life's never that simple. So it's probably going to look a little bit more like this. So ultimately, these are incredibly useful metals. The energy transition is an incredibly tough challenge. A growing population with increasing prosperity brings its own challenges. We're going to have to use the platinum group metals in a wide variety of ways to support the reduction of poverty and the move to a sustainable economy. So ultimately, we could see a situation where we have imbalance again. So really what we're going to do is we're going to see those stocks performing that function they've always performed of absorbing the short-term imbalances, whether surplus or deficit. So stocks playing their role. And then in the longer term, what we are going to see is scope for increased recycling and more PGM mining. We need to think about this. So we've got a tremendous store of above ground PGM. We already do a lot of PGM recycling, but we do know that collection rates of some forms of end-of-life scrap are not as high as they could be. In most closed-loop recycling, collection rates are very high. The technical recyclability of PGM is very high, so you get extremely high recycling rates. More open-loop recycling, you tend to see more significant losses. So AutoCAT, you do tend to see losses kind of the order of 30%. So we do know there is headroom there to increase recycling through more efficient collection. There is also scope for increased PGM mining. There is a vast amount of PGM sitting in the ground in Southern Africa. Getting to it is not a function of geology so much as a function of investment. With sufficient investment, we can mine more PGM from those existing locations of supply. So in the longer term, recycling, reuse of this above ground metal, and increased mining can all play a role. And in the shorter term, we've got stocks doing their usual thing. So this is probably the kind of picture we'll see emerging. So a note then on PGM availability. When we're thinking about availability, and if you're looking at using the PGM from a new application, that is what you're interested in, it is broader than supply. So supply is just the new metal going into the market in a particular year. Market stocks are a function of the supply and demand imbalance accumulated over time. So we need to consider those. And then we do, in the longer run, also need to think about above ground stocks, which also includes the metal currently in service. The recyclability and durability of the PGM means that long run availability must also consider this accumulated metal in service and whether some of it could support availability in future. I'll talk more about that in regards to petroleum refining and platinum on Thursday. And then, of course, the other thing supporting PGM availability is just the sheer amount of PGM sitting in the ground. But that is longer term. So what about ruthenium and iridium? Well, for the minor metals, primary supply is inelastic. No one is going to go and mine just to mine iridium or just to mine ruthenium. It's going to be a function of mining the basket. How much of the basket are you mining? How much of that platinum do you want? And palladium for your new applications. And then that's going to determine how much ruthenium and iridium comes along. So inelastic primary supply, but incredibly useful metals with emerging energy transition applications and other new applications. So how does this work? Well, we could see an imbalance. That's certainly possible if we do nothing. But the PGM industry doesn't do nothing. So what could happen? Increased recycling can play a role. So at the moment, there's a lot of recycling of ruthenium and iridium in closed loop. So I could have put increased recycling on either supply or demand, because under demand, it's negative demand, but I've put it under supply. There is definitely headroom to increase recycling of ruthenium and iridium. And for example, we talk about iridium spark plugs, which are not generally recycled from end-of-life vehicles today. So scope for increased recycling, thrifting, that focus on intensity of use and efficiency of use is going to be key for these metals. So we're going to see that. We're seeing that already, certainly in PEM electrolysis. And Mark on Thursday is going to talk about thrifting in PEM electrolysis and what that means for iridium. And we will also see some substitution and switching in existing applications. And in fact, we are already seeing this starting to happen today. So this is already emerging as part of the picture. But maximizing the efficiency of use of all the PGM, but particularly these minor metals, is key to supporting availability. So let's put it all together then. Mining for critical metals will continue to supply a basket of all the PGMs. Recovery of secondary PGM from scrap will continue to supply the market. We'll see natural shifts in demand away from fossil fuel-based applications. and an existing value-driven focus on circularity and maximized efficiency of PGM use will only intensify. Put all of this together, and what we have is sustainable availability of platinum group metals for energy transition applications and other new applications. Some last words then on the PGMs as critical and strategic materials for the future. I think it's important to note that the platinum group metals face unique market dynamics as critical metals, and it's really worth understanding those unique characteristics. And not like many of the other critical metals where we do face potential supply and demand gaps, which are concerning. In many cases, PGM use in new applications is replacement demand, not competing demand. PGMs also benefit from established regulated mining, significant above ground stocks, and substantial below ground deposits. Availability of PGM is supported by established recycling infrastructure. We already have those global recycling networks and the secondary refining capacity in place, and we can leverage that for the future. And in the context of circularity, as has been said a number of times, yes, these are not cheap metals, but what you're doing is you're investing in an asset for the future. And we really do believe that the platinum group metals present a significant and really, I have to say, very exciting opportunity for the future. Thank you.
Marge, that was truly brilliant. Thank you so much. Everyone, please put your hands together for the wonderful Marge. Absolutely amazing. I could sit here and listen to you all day. That was absolutely fascinating. Thank you so much for that. And during your talk, I hope you haven't been distracted by the millions of questions that seem to be coming in at the moment and the additional people that have been logging in to listen. So now, everybody, just to let you know, we are well over 1,000 people that are signed up for this conference now, which is fantastic. So whether you are listening to this live and taking part in this discussion, and we'll go into some questions in a second, Marge, or if you're watching this on the recording online, thank you very much for engaging in this discussion because it's a good one. So Marge, just with regards to what you've been talking about here, and especially on the recycling side of things. So there's been a lot of questions coming in, especially with regards to the closed loop recycling. And a lot of these questions say, how much how much is in that closed loop recycling? And I suspect the reason why everyone's asking this is, so personally, I do a lot of work in circularity, in the circular economy. And if we can show how much stock effectively is going round in those recycling loops, then it helps us to go, okay, well, yeah, actually, how much platinum or whatever do we have available, even if it's locked up in technology or whatever at the moment, but it might be available in the future. So I'm acutely aware that we're not seeing a number for the number of tons, for example, in closed loop. Is there a reason for that?
That is because that is valuable IP that we retain for strategic insight, obviously. But I think we are doing more to try and educate people. If we can't give you a specific number, well, we can talk about this and at least support the understanding about it. But we do also do a lot of work, as Emma will attest, so talking to regulators who are trying to understand the recycling rate of the PGMs. It's not actually straightforward because sometimes it's quite hard to pin down the closed loop. So we're still learning as well. And pinning down recycling rates is not a straightforward exercise, but we do try and support that understanding of regulators and others to really fully appreciate the circularity that is here. So unfortunately, I can't give you a number, but I think what we're keen to convey is the existence of the closed loop and the fact that it is significant.
Okay, so we can acknowledge that the closed loop exists, but if you tell us any more than that, we won't be allowed to leave this virtual room. Is that correct? So with that, Titil, sorry, and my apologies for destroying your name there in terms of the pronunciation, asked a really great question early on, and it builds on that closed loop model, I guess. And what they ask is, in closed loop recycling, does, say, for example, Johnson Matthey own the metals, and are they rented to the application, or is that not the way around that it works? Can you just explain that in a bit more detail, Marge?
Yeah, and I'm not a trader, so or on the commercial side, so I'm not going to talk about the various models around owning and leasing metal, but certainly there are different ways to do that, and ownership models can vary. So we sort of oversimplify and say ownership is retained. That can take a number of different forms. It can take the form of leasing or whatever, or the fact that you actually just own the metal all the way around the closed loop. So there's different ways that can function. Essentially what it's doing, though, I think the reason we call it all closed loop and say ownership is retained is essentially there is a return of value there. Someone is getting their original value back in some way. So yeah, saying it's a bit of an oversimplification the way we define it. There's lots of complicated and interesting ways to handle, you know, buying PGM, and certainly our commercial team would be more than happy to talk through those. But yeah, that's the bottom line. Essentially, somebody is getting that value back.
That's really interesting, because I think as well, for the rest of the minerals and materials and metals markets that are out there, actually metals as a service is a concept that people have been discussing for a little while, but it's still kind of like, oh, we could do this thing. But actually here in PGMs, it's happening. It's here, it's alive. And so I think this is great actually for the broader industry to learn from PGMs. And then I guess building on that, so Lee has been absolutely stellar with regards to questions. So Lee, thank you so much for the never-ending list of questions that you've got. Keep them coming, because they're all genius. But one of Lee's first questions that he posed was, okay, so we've got all this fantastic recycling, and so we've got, you know, be it from catalytic converters or what have you, but if over time we've been getting really good at the thrifting, so there's less in those catalytic converters or whatever, what does that mean for the future of recycling? Is recycling going to get more difficult, or, you know, the sort of almost the thrifting versus recycling equation? Is there something in that?
Yeah, there's a couple of things to say there. So the first is, if you're thrifting, there is a balance to be struck between thrifting but ensuring you can still do the end of life effectively. So that's all about the design for recycle and design for refining. So that is always, if you work with someone who understands the end of life solution, you can kind of do that whole thing up front. Generally, though, you seek to use the metals more efficiently, and ultimately, obviously, there will be a drop off eventually of returns from catalytic converters. But what we see in the refining industry is a mix of different forms of scrap. And what we know will happen, what we're preparing to happen, is a change in the profile of the scrap volumes that we manage. So obviously hydrogen technology scrap, that's going to be a new source of scrap coming through soon, actually, with its own unique characteristics. So as a secondary refiner, your kind of bread and butter is understanding the scrap profiles and optimizing your process for a particular form of scrap. So, you know, if your PGMs keep being used, you're going to see recycling volumes continue, and whether that's in closed loop or open loop or whatever you want to categorize it as recyclers, we will see volumes continue in some form or another. But yes, it is true to say that thrifting, it can ultimately bring the grade of your scrap down and make it more challenging to treat. It's generally still worth doing, but you know, we would encourage everybody to think about that end of life solution and exactly how that works when they're designing the materials up front.
And with that, Marge, in terms of, so I imagine that we are relatively, or we're really good at recycling technology that's been around for a while. So something like, again, the catalytic converters, etc. But how about the new technology like fuel cells? Is it exactly the same in terms of recycling, or is it kind of like, do you have to use different processes to recycle the PGMs, etc.? And of course, we've got the different variety of PGMs that are in the other forms of technology as well.
So it's kind of both. So to unpack that, we are already recycling scrap from fuel cells. So it's already being done. It's already been achieved. It can be done in existing setups. What we're talking about, though, is optimizing that recycling. And that's about really optimizing your process for the profile of the scrap and ensuring you're getting all the critical materials back. So not just the PGM, you want to get all the critical materials back. And what that means is you do R&D. You understand this new form of scrap and you figure out how best to treat it. And treating hydrogen technology scrap is an extremely active and intensive area of research right now, because we all know it's coming. So people are already preparing for it. But the fact is, you can already, if you've got end of life fuel cell product, you can already get the PGM back from that. So it can be done already. We really want to do it perfectly, hence the R&D, to do it in the best way possible.
Awesome. So it's all about I guess efficiency and effectiveness at all points in it. And even though you go, great, okay, we've managed to put the platinum, etc., within the catalytic converters to stop all that nasty NOx and carbon dioxide, etc., going out into the atmosphere. But then it's about improving things constantly. And I guess we've got a whole series of talks coming up later on today, tomorrow, and Thursday, especially. So we've got to talk the talks about the recycling of some of those aspects of fuel cells on Wednesday, which is going to be really exciting. Now, Marge, again, I could ask you questions, and they're still coming in, by the way. So if you do have a moment and you're able to go and take a look at the Q&A and answer some of those questions, that'd be amazing. But
Sure.
please, everybody, put your hands together for the phenomenal Marge Ryan. Thank you very much.
Thanks, everyone.